Have you ever wondered why your money is just sitting there doing absolutely nothing in your regular savings account while inflation slowly eats away at its value? What if I told you there's a simple solution that could help your money grow without any risk, and most people don't even know it exists? Today we're diving into high-yield savings accounts, and by the end of this video, you'll understand exactly how to make your money work harder for you. I'm going to be completely honest with you. When I first heard about high-yield savings accounts, I thought it was some kind of scam or too good to be true. How could banks just offer higher interest rates for basically the same thing? But after doing my research and actually using them for years now, I realized I was leaving money on the table every single month by keeping my emergency fund in a traditional savings account. Let's start with the basics. A high-yield savings account, often abbreviated as HYSA, is essentially a savings account that pays significantly more interest than what you'd get at your typical brick-and-mortar bank. While your traditional bank might offer you a whopping 0.01% annual percentage yield, high-yield savings accounts can offer rates that are often 50 to 100 times higher than that. Now, before you get too excited, let me clarify what we mean by high yield. We're not talking about investment returns here. These are still savings accounts, which means they're FDIC insured up to $250,000 per deposit or per institution. The money you put in is guaranteed to be there when you need it. You won't lose your principal like you might with stocks or other investments. The reason these accounts can offer higher rates comes down to the business model of the banks that provide them. Most high-yield savings accounts are offered by online banks or credit unions, rather than traditional banks with physical branches. Without the overhead costs of maintaining hundreds or thousands of physical locations, paying rent, utilities, and staffing these branches, online banks can pass those savings on to customers in the form of higher interest rates. Think about it this way. Your local bank has to pay for that fancy building on Main Street, all those tellers, the free coffee in the lobby, and the security guards. An online bank just needs servers and customer service representatives. That's a massive difference in operating costs. But here's what really matters to you as someone just starting to think about where to keep your money. Let's say you have $10,000 in an emergency fund. If you keep that in a traditional savings account earning 0.01%, after 1 year you'd have earned exactly $1 in interest. $1. That's not even enough to buy a candy bar. Now let's say you move that same $10,000 to a high-yield savings account earning 4.5%. After 1 year, you'd have earned $450 in interest. That's $449 more than the traditional account, and all you did was move your money to a different bank. That extra $449 could pay for a nice dinner out, cover a car repair, or just give you a little more breathing room in your budget. The beautiful thing about high-yield savings accounts is that they require absolutely zero financial expertise to use. You don't need to time the market, pick winning stocks, or understand complex investment strategies. You simply open the account, transfer your money, and watch it grow at a predictable, guaranteed rate. Now I know what some of you might be thinking. If these accounts are so great, why doesn't everyone use them? The truth is, many people simply don't know they exist, or they're hesitant to bank with an institution they've never heard of. There's also the convenience factor. If you're used to walking into your local bank branch to handle your banking, the idea of managing everything online might feel intimidating at first. But here's the reality check we all need. In today's world, most of our banking is already happening online anyway. When was the last time you actually went inside a bank branch? Most of us are already checking balances, transferring money, and paying bills through apps and websites. Managing a high-yield savings account is no different. Let's talk about some common concerns people have. First, the safety question. Are online banks safe? The answer is yes, as long as they're FDIC insured. The FDIC insurance covers your deposits just the same whether your bank has a building on every corner or exists entirely online. In fact, many online banks use the same security measures as traditional banks, sometimes even more advanced ones. Second, accessibility. Can you get your money when you need it? Absolutely. Most high-yield savings accounts allow you to transfer money to and from your checking account electronically. Some even provide ATM cards, though you might pay fees for ATM withdrawals depending on the specific account. The key is understanding that these accounts are designed for savings, not daily spending. Third, the rate stability question. Will these high rates last forever? Here's where you need to understand that interest rates on all savings accounts, including high-yield ones, can fluctuate with the broader economic environment. When the Federal Reserve raises or lowers interest rates, savings account rates generally follow the same direction. However, high-yield savings accounts consistently offer better rates than traditional accounts regardless of the overall rate environment. So who should consider a high-yield savings account? Honestly, almost everyone who has money sitting in a regular savings account. These accounts are perfect for emergency funds, short-term savings goals like a vacation or down payment, or any money you want to keep liquid and accessible but don't need for daily expenses. The ideal amount to keep in a high-yield savings account varies by person, but financial experts generally recommend having 3 to 6 months of expenses in an emergency fund. This money should be easily accessible but earning as much interest as possible while you're not using it. A high-yield savings account fits this requirement perfectly. If you want to explore some examples, I've added a few optional resources in the description that can help you compare current rates and features from different providers. When you're ready to open a high-yield savings account, there are a few things to look for. Obviously, the interest rate is important, but it's not the only factor. Look at minimum balance requirements, monthly fees, and how easy it is to transfer money in and out. Some accounts require minimum balances of $1,000 or more to earn the advertised rate, while others have no minimum at all. Pay attention to how often you can make withdrawals. Federal regulations used to limit savings account withdrawals to 6 per month, though many of these restrictions have been relaxed recently. Still, these accounts are meant for saving, not frequent transactions. Also consider the bank's customer service reputation. Since you'll likely be doing most of your banking online or over the phone, having access to helpful, knowledgeable customer service is crucial. Here's something that might surprise you. You don't have to choose just one bank for all your money. Many people maintain accounts at multiple institutions. You might keep your primary checking account at a local bank for convenience while keeping your savings in a high-yield account at an online bank. This strategy lets you get the best features from both types of institutions. The bottom line is this. If you have money sitting in a traditional savings account earning next to nothing, you're essentially paying an opportunity cost every single day. Moving that money to a high-yield savings account is one of the easiest financial wins you can achieve. It requires no special knowledge, carries no risk to your principal, and can put hundreds or even thousands of extra dollars in your pocket each year. Your future self will thank you for making this simple change today. The money you earn in additional interest can help you reach your financial goals faster. Whether that's building a bigger emergency fund, saving for a major purchase, or just having more financial security and peace of mind.